All right, traders, what's up? Welcome back to another day trading with the team. Let's have a look at what we have in the market right now. Let's start by looking at what happened yesterday with the DXY. The DXY is still ranging, guys, still ranging. Non-directional trade on the DXY. The US dollar still ranging between those highs around 93.12. And the lows are make it or break it level when we saw buyers jump in again yesterday. Well, at the beginning of today's trading day, around the 92.80, right? 92.81, let's call it, right? So non-directional, very non-directional. Trading in the DXY, the 61.8, obviously not doing much, but let's do some calculations, right? Why don't we? This is last week's range, right? So reckon we might be at the 76.4 like last week's range. This is the last, exactly at the 76.4 of last week's range. This is by all means the last frontier for bulls if they want to hold this bullish structure, or this at least short-term bullish structure in the DXY, right? Now let's see if we actually can find some structure in this market from this high to this high. Let's clone this, and yeah, I mean, structure-wise, we are still inside of this bullish structure, short-term bullish structure that started when the last leg down, top down at last month's lows, right? This month's highs, of course, is right here. So nothing much to say other than we are waiting for a true directional move on the DXY. And the yen basket, let's have a look at the yen, right? Let's delete this. Well, the yen broke to the downside, guys. No more long yens in our side. I'm sorry, I was taking a sip of my coffee. No more long yens on our side. The yen broke with the make it or break it level, and now is bearish in the short term, guys. At the moment, there's absolutely nothing to do here other than wait for a setup. We do have Olympus Euro Yen really massively going for targets. The Aussie Yen, after that bear trap at the 39.40 level or so, is continuing to rally. The CAD Yen completely missed that. Well, this is a setup that I had yesterday, right? I didn't take any trades here on the CAD Yen. Why? Because we were still trading inside of this supposedly reversal pattern. Looked like a reversal pattern. I needed for these lows to break in order for me to continue or trade the bearish side of this market. That didn't happen. Now we are bullish again due to the yen's, of course, drop. Now, what I like about the US dollar Canadian dollar is that it's holding very nicely these previous highs, right? Now let's go to the 2-hour chart actually on this market. Much better structure on the 2-hour chart. Insane parabolic move to the upside and to the downside. So this means that, well, if we look at the the daily chart, you can see why we did have that insane parabolic move to the downside, right? Why? Because we are retesting the 130 level, these previous lows. And these previous lows were the lows where we saw real buyers jump into this market, right? Those are the pandemic highs, and then the market completely crashed down. Now, I was on the daily looking for what seems to be short on a possible bearish flag continuation on the long term, right? But this level holding very nicely, we could get another leg up before eventually turning to the downside, if that is what's going to happen, right? And of course, on the short term, the 2-hour chart, what I'm looking is for longs, guys. This structure, I mean, even though it is a bullish structure, it is a very slow bullish structure, but we are still very much holding it quite nicely, right? As you can see here. So the overall, we have another low here. That makes it a lot easier, right? So this structure is still holding on the USD CAD, the short-term structure on the last leg up still pretty much holding too. So anything above the 26 level would be bullish for me. And in fact, this still looks very much like a pattern, right? So it's a triangular pattern. So we have the let's count it out, right? We have the 1, the 2, the 3, the 4, the 5. So where are we going to actually break out of? We don't know. So we are going to be using orders instead, stop orders on that trade. So if you want to get on that trade, all you have to do, mates, is subscribe to the VIP channel. The link is below this video. All right, so let's have a look at the XY. We're saying still non-directional trading. The US dollar is really overvaluated at the moment. Fundamentals do not, or economic fundamentals do not support such high prices on the US dollar. But remember that the market can remain irrational for long periods of time. So we trade what we see, and we're seeing right now is non-directional. Gold broke yesterday, so that's why we deleted our buy stops in gold. It broke with again this level. There's no trade in gold at the moment. I am not looking for that market at all. Now, the one that I'm looking for really is perhaps some shorts in crude oil. Technically speaking, we are at a very high level, right? We are retesting. I mean, we have made a complete comeback on last week's range, right? Last week's range right here. We have made a complete comeback, and we are trading in a midterm bearish structure. Now, the structure that we are looking at, let's do some calculations, some fast calculations, right? From the high to the low, first leg down, we were looking, I think, at 50% or so. Let's see, exactly at 50% and a 76.4, if I'm not mistaken, of the last leg down, right? And of course, 100% of last week's range, which I'm not going to plug in because it's completely, actually a little bit more, 101%, but that doesn't matter. Right, so I'm not saying that this is a massive shorts opportunity, but I mean, just a heads up on the break of yesterday's lows and this massive bearish candle right here. All right, so let's finish up by looking at some Ethereums. Ethereum is still just hanging around at the highs. I actually hedged my my long position in Ethereum, and and I'll show you what I did actually. I'll show you what I did. I'm still holding on to that big from the lows, right? Hold on, let me just delete this. So this is what I did. Let's go to the daily chart, daily time frame. I'm still holding those buys from the low. I mean, I cleanly bought the lows, and what I did, I deleted the stop loss on my long position, and now I am just short, and I added a short with the same size as my long position, which means that I'm a hedge. If the market moves down, right, I don't lose money on my long position, right? Why? Because I will be making the exact same amount of money on my short position that I will be losing on my long position. The reason that I did this, even though I'm holding this to all-time highs, the reason that I did this is because I don't want to get involved in a deep corrective move here at this stage of the trade, right? We could very much be... I mean, if we break with these highs, let me just highlight those for you guys. I'm going to insert, that's why I hate doing analysis on MT4. I never use this rectangle. So, if this level breaks right here, guys, then this is why I hedge my position. If that level breaks, we could very much be in a deep corrective move to this second level, which means that if I hadn't hedged, my stop losses would have been hit at a profit, but I would have missed on this entire part of the move, which I don't want to do. That's why I'm hedging right here with the same large amount, the same risk, not the same risk, I'm sorry, same size. And well, if price moves up, I'm going to lose a little bit of money on my short position, but I will make that money back on my long position. So right now my position is neutral in the sense that it cannot make more money, right? Unless we break with my stop loss on the upside. Now, if the downside happens, right? If the downside happens, boom, and price drops to this level, I'm not gonna close my shorts, right? I'm not gonna close my shorts. I'm going to be patient to see if we continue. I mean, if we reject this level and we continue to move higher, then I'm going to move my stop losses to break even right here on my short position and let that trade ride. So whilst price is trading inside of my entry, of my long entry, and my stop loss on the short position, my position is neutral in the sense that it cannot make any money, but it's protected against a deep pullback, which if I were not hedged, it would not be. So that's a clear explanation why you hedge long-term positions, right? I didn't know I was going to do this on today's daily watch list, and I actually might do a video on that just as a with a nice explanation, right? Anyone want to join the VIP team? The link is below this video. You are more than welcome. We do have a 30-day money-back guarantee, and there's no risk for you. And we do have one very nice possible long position. I'm not going to tell you why, because this is a public video on the with the VIP team right now. So you should consider that. Cheers.